This is incredible, folks. This is the highest level that I've seen recently looking at anywhere in the Orlando Metro. And if I were an owner or looking to buy in Davenport, this would freak me out, to be honest. There are incredible changes unfolding in the Davenport housing market that if you live here now, you need to be very mindful of. If you're considering a buying in the future, I've got two major risks that I'm seeing in the data. I'm gonna roll through it so you can understand what is happening in this market in real time. Because I gotta tell you folks, the rest of Florida is taking on and being buried by property. But the often misinformed story and what's less talked about is what the Airbnb market has had to face over the past 2 or 3 years. And those in this market that are trying to sell a property in an Airbnb community know exactly full well what I'm talking about, as they've watched many of their neighbors on the same streets, signs piling up, everyone listing their properties for sale. And ultimately, this comes down to two words: interest rates. Interest rates got far worse, much faster than the rest of the market for Airbnb. And you have to understand, as we cover Davenport, we are talking about a segment of zip codes where 32, 33% to as high as 50% of all of those zip codes are non-owner occupied properties. Those are properties that are purely bought as second homes or investment properties. And when those owners get ready to sell those properties, they're selling them back to people that are investors themselves. And those interest rates are furiously high. And ultimately, that has just slammed a damper on this particular market. Not to mention other issues, right? There's tourism levels are down, things of that nature, which we experienced a spike during pandemic season. Income levels are cycling and changing in real time. And all of that, again, Disney's not going anywhere. The income levels in these properties, they may change, they may go up a little, go down some. Ultimately, we know Disney's a bellwether. It's here. It's not moving. It's not, no matter what DeSantis does to it and all this other stuff, this is here. This is a marketplace, and it's going to attract people for the end of time in all likelihood. So as your resident born and raised in the Central Florida marketplace, with nearly 4,000 home sales, you're going to have a real estate expert opinion diving into this data. I'm fascinated by it. I got some crazy eye-opening things to show you. And as we smash into the data, smash down below to the right, hit that like button for me, please, so I can feed my 4 boys. Let's get into the data. Pay attention. I know you're here for a Davenport, Florida update, but this is Florida, the state. This is all property types for the entire state. I want to give you a quick context so we can see how's the state doing. And then when I drop the data on you on Davenport and go, holy cow, Davenport's way ahead. It's doing way better than Florida at large, or it's far behind. We'll call this the control group, right? Now, as we scroll down through this information, you're gonna see this is April data. This is made available to us by the Florida Association of Realtors. If you are not licensed, you would not have access to this statewide data pool that we as realtors have. And I'm gonna share it to you right now. You can see in Florida through April, closed sales are up a little. But remember, last year we had one of the lowest sales numbers on record for the entire country. So when we are only up just a little bit off of a record 30-year low amount of sales, this isn't really a banner statement of things changing. So understand that. Cash sales are holding a little above last year, which is helpful because obviously interest rates are really high. Median price is up 3.6%. Average price is up 9%. Dollar volume is up 14%. 2 more points of data on this that are interesting. It is taking 27% longer to sell your house this year versus last. It's drawing out even further. And another thing is the amount of people jumping out of their house in Florida is climbing rather quickly. It is up 25%. This is why you see all the data right now saying Florida's got so much inventory. Well, we know why that is, because we're really not selling many more homes than record low last year, but we sure as heck are listing a lot more, when 25% increase of people still saying, I'm out, I'm getting rid of my house. Now check this out in April. Pending inventory for the state of Florida is down nearly 8%. If we're selling less homes, we're putting them under contract. That is a leading indicator of how many will actually sell. If we're putting less under contract in the same time last year, it serves to reason that May or June in Florida are not going to be remarkably healthy versus last year. That's not a good sign. When you look at this, you see active inventory is now creeping up to 64%. That is insane, folks. I'm not trying to be hyperbolic. Look at this. Last year at this time, we had 94,000 homes on the market. This year, we have 155,000 homes. This was only 57% up on prior year last month. So we can see that Florida inventory is stacking higher and higher, and we can see it. It's right in front of us on why this is happening. As a result, this is a concern right here, okay? This is called months of supply. This is one of the most important indicators of crash level concern. Again, this is, don't construe what I'm saying that there's anything off or this is, train off the tracks. But this right here, we had 2.9 months of inventory last year. Right now we have 5 months of inventory. What that means is if you stop bringing any homes to the market, and keep in mind, there's way more coming in the market than a year ago. But if you just held everybody off at the pace we're selling them, how long would it take to sell off all the inventory? 5 months. Last year, it was less than 3. By the way, you say, well, Jared, what's the scary part of going to 6, 7, 8 months of inventory, which is what it looks like we're heading because more is coming to the market, it's not being absorbed. That is when you start to see deeper cutting. When we had the market cycle last time, okay, I'm a history nut. I love this kind of stuff. When we cycled the market in the past economy, when we had it cycle down in 8, 9, 2010, 12 on, that down cycle, the biggest price cuts happened when you were over 7 months. So once you get to 8 months and 9 months, it starts to get really scary. Now, I want to tell you on the positive side of this data, you have to understand that most of this is disparately distributed. So what I'm saying is, the Central Florida marketplace is far healthier than a lot of the other areas. So Miami and Central Florida principally are probably the two hottest markets still in terms of like hotness. It is cycling, it is changing. Sellers can't just mindlessly throw their house in the market and think it's just going to disappear because that's not true. But one thing that we do know is that a lot of this inventory that's showing up on these charts that looks like super scary, a lot of it's happening in the southwest of Florida. It's happening below Tampa, from Sarasota, Northport, Naples, Cape Coral. All those areas are just getting blasted with heavy loads of inventory and they're having a hard time figuring it out. But everywhere else, it's stacking up at a much slower pace, yet it is increasing. It is shifting more into the favor of the buyer. The Florida state as a whole is very much a buyer-favored state, but if you look more in the economy of Orlando, I would call Orlando and even Davenport neutral. But let's look into the story of how Davenport is doing in this very moment. All right, same data source. We're looking from the Florida Board Association of Realtors. We're going to look at all data from Davenport at large, all property types for this area. Not off to a good start. You can see top line, closed sales is down. Davenport is trending less transaction volume than a year ago by 11%. Obviously, this is flipped because remember, the state of Florida at large had 6% more inventory. So we're down 11%. Cash sales, this is fascinating. We have 33% lower cash sales. It's on a bottom, folks. It's just much different than a year ago. So look what we have here. Median price, 65% lower than the entire Florida state economy here in Davenport. It's up just 1%. So you want to call it flat, just like this line, dead even flat for median price. On the average, we're running up 3%, which you'll remember the state of Florida was around 9%, which means we are about 65% down. Dollar volume for the state was up. We are down by 8.3%. I think that's a swing because I think if I remember right, we're like 14% up on the state for dollar volume. We're down around 21, 22% for the area of Davenport in dollar volume versus the state if you average out the difference between where they are and where we are. So it's underproducing in the state. Median time to contract for the area is up to 31 days. Median time to sell has gone down 23%. New pendings is down 7%. New listings is down. This is a great redemption right here. The fact that we have new listing volume actually down for this area is a saving grace for this market. What this tells us is that the word is out and a lot of people are like, I'm not putting my house on the market right now. There's more restraint in this area with people saying now's not the time. And so people that can choose to hold are just holding off and they're not bringing it to the market, which is good because look at this. Pending inventory. Remember, leading indicator of what's selling in a month or 2 months away is what's going under contract right now. And they're down 30%. That's not good, folks. When you come up here, look at the top line. We're 11% down right now. And now we're facing a 28% pen rate beneath last year. If you follow the logic, how low are our sales going to be in a month or two? They're trending down. Active inventory is up 31.8%. And fortunately, for the good nature of all these other data points, there is still decent months of supply at an improvement of 15%. All right, let me show you a better look at Davenport. I'm glad I've decided to pull zip code data because this is huge. This right here is the inventory levels in this marketplace right now, and they are literally off the charts. For the zip code, that's the thing, you have to pull away other zip codes in Davenport, because Davenport has a lot of disparate areas. There's areas that are completely rural. There's areas that are really, really stable, that have nothing to do with the actual Disney marketplace. But let's stay on the north side. I'm gonna pull a couple zip codes in a row for you. North edge that are highly traded. Look at these numbers. You see this diagonal line, this dotted line across the middle? That is the average for this bottom end of the chart going back to 2016. So it's like an 8-year span of time, 7+ year span of time that we're running around 230 homes if you average the entire course of time. And particularly you look at what was the same market like before all the stimulus money sunk the amount of homes we had for sale and drove us into multiple offers for this period. Look what happened, folks. Whenever in April 2022, interest rates started climbing, it has gone non-stop straight up, okay? That's 33896. This, by the way, on the side is a running data point of how favored in buyer side on the left or seller side on the right. What is the likely chance of price forecast falling in this area? It is a 28, which is incredibly low. And this is driven because inventory in this marketplace is off the charts, crazy high. Again, here's another chart. This is 33897. This is looking a little better, not as crazy, but you can see the 5-year average here, just over 200 homes. 33897 is really Highway 27 from the Four Corners area all the way down going towards I-4. Very populous area, a lot of properties here being traded for both Airbnb, full-time residency. You can see, look, coming off of the last market craze, there was almost 400 homes on the market in 2016, and it just absolutely reversed itself, and it hung around 200 homes on the market up until, again, that dip. But look what's happened. It's climbed straight up, and it looks like it might actually be going sideways, but it is going sideways at an absolutely high pace. And you can see, again, price down. The estimate here on the scoring system for this platform that I use shows a forecast of 26, which according to the data, this is saying there's a very high likelihood for continued price slide in this area. Now we're going 33844 real quick. This is the marketplace directly south of I-4. Same deal. You can see runs around 200 average homes on market, drop below, and it's gone vertical. It caught its breath. This is probably early 2023. Yep. The pattern you see here where it came out of a hole and climbed when interest rates shot up, there was a correction in the more permanent market. So if you look in the areas around Orlando that have high regular full-time occupancy, this is what happened in the rest of the marketplace. Shot up to 2023, early part of last year, it caught its breath a little and then it went a little higher. Here it's gone a lot higher. So again, this is a 27 showing high chance, buyer favored, tougher on the seller, price your home right. There's plenty of market, okay? You do not want to be on the market for a long time in these kinds of markets if you have to sell. I'm going to tell you that as a seller, that's something you need to know. All right, a few last charts I'm going to show you relating to home price. How is home price doing in this particular market? This is, again, Highway 27, just below Four Corners area. If I flip to a monthly view, look what's happening. It spiked somewhere in 2022 and it came off of the highs. It never gained it back and it's kind of rolling sideways right now. Look at this. If we go next door, we go through the Champions Gate area, 33896, not so much luck. This is obviously a down market. Again, it peaked in July 2022. First notion of interest rates going from 3.5% to 7% over the next following 4 or 5 months. And this has been draining price. And again, just so you know, the rest of the Central Florida market looks nothing like this, okay? It's all either still climbing or it's a slow elevation, like a plane taking off. This is unusual, folks. This is not common. So you are seeing market softness in these upper areas of Davenport. So I'm really glad I actually pulled this data on the upper edge where most of the buying happens. You can see there is going to be some letting down of price. If you're a home seller, right, and you see that it was here in 2022 and you're trying to price against the high of where it was and your home doesn't really have the chops to keep up, you're gonna have a hard time selling. That's what this is saying. It's saying there's trading dropping on the exact same homes 2 years prior. Trading is now coming beneath the high. And I will tell you on my own anecdotal side of things that I am seeing new records set on the reverse. So a lot of these subdivisions, great Airbnbs, fully furnished. Let's say a year and a half ago, everything in those neighborhoods sold in the mid 300s, for example, or the mid 400s. Now there's new lows coming in where they're 10, 15% below those peaks. there's opportunity. There's opportunity for buyers for sure to get into these markets because there's a big element of competition and gives you an opportunity. If you stay focused, you can buy it right now. We'll tell you this, if you are selling in this area, I have people calling me all the time looking to buy in this particular area. If you're a buyer in this area, I have people all the time calling me saying, hey, here's my process. Here's what I got. Here's the data, the numbers. Help me sell my house. For both you buyers and sellers, I am like the eHarmony of real estate, and I will pair you up. Give me a call. My information's at the end of this video. We'll talk to you real soon. Thanks for watching.